Welcome back, everyone. Welcome back, ladies and gents. Good morning to you. Good afternoon. Good evening, depending on where you're logging in around this planet of ours. Happy Tuesday to you guys. We made it through the Monday, kind of a sleepy Monday, but as I was talking to Marty about this, a very active and very profitable Monday. Welcome back here. Hope you guys enjoyed the break. Another day, another dollar. Welcome back to our crude oil prep. We're going from the screen all the way to the trading floor this morning. My name is Joseph James. I'm here from SchoolOfTrade.com. I'm a technical analyst. I'm going to be analyzing some charts this morning. Once I'm done with my top-down technical approach, I'm going to toss it all the way across the country, back over to the NYMEX exchange. I've got my buddy Marty Errico from Traders Audio with his feet on the ground on the NYMEX exchange in New York City. He's going to provide us with some very unique morning prep information this morning. So once again, my name is Joseph. I'm a technical analyst. I'll be giving you guys a top-down approach this morning, which means starting with some slower anchor charts and moving all the way down to the overnight trading session. I'm looking at minute charts, looking at what happened overnight, and ultimately I know that if I can analyze London, if I can analyze what's been happening over the past 12 hours, I can anticipate direction at the open, I can find high percentage trading opportunities at the open, and I can be ready to rock and roll here at 8 o'clock this morning. So my job is pretty simple. There are lots of ways to trade these markets, lots of ways to trade every day, no matter what type of trader you are. What I know is that some trades are higher percentage than others, and I'm seeking to find those high percentage positions this morning, starting as early as 8 a.m. Now, you know, I make a lot of mistakes in my career, and you probably do too, and that's why we're really, really thankful to have our buddy Marty Errico here with us. Now, Marty's got his feet on the ground, the NYMEX exchange, and he's going to provide us with his pit analysis this morning, which I personally think is a very effective way to combine the charts and the trading floor, right? Talk about the best of both worlds. We always talk about, right, the death of the trading pit, right? And as much as we hear that in most commentary these days, the NYMEX exchange, the trading floor for crude oil and natural gas is thriving. And we've got Marty Errico going to tell us today about market direction, intermarket divergence, market internals, important option prices, right, because they will lead the market, the futures market, and of course those very important pit session trading levels this morning. All right? As always, we're very thankful to have him with us because he's going to provide us, he'll fill in the gaps we're looking for here, right, as we look at our charts today. All righty. Enough out of me. Let's grab some charts. Let's take a look. And the first one we'll do this morning is let's take a look over at the blog this morning. If you head over to the Crude Oil Squawk blog, again, you can get there by going to sidewaysmarkets.com. Over at sidewaysmarkets.com, head over to the Crude Oil Squawk and Prep. It's a button right there. We are moments away from releasing the newest update to this website, which will have an entire member section. It will have the ability for you guys to register for this event every single morning. So keep an eye out for that. It's coming very, very soon. Been working hard over here on my end. Click on that Crude Oil Squawk link, and now you've got your Crude Oil Squawk blog. Let's take a look at the news for this morning. Really quick, just a quick dusting of the news here today. We had we talked about this yesterday in our live trade room. We've got Red Star News 1, 2, 3, and 4 days this week. We do have OPEX on Friday. This is, count them up, this is the third Friday of the month. OPEX Friday, what does that mean? That means as of the end of the day on Friday, all options are expiring. That means that as of Wednesday this week, we should expect to see some reaction to that. Okay, Monday and Tuesday is not going to be that important for OPEX week, in my humble opinion. We know we threw Monday so far. Here we are this morning. I've got 8:30 a.m. consumer prices, and I've got 9:15 industrial production. Both of those are going to be tremendous movers for crude oil traders, natural gas traders. Okay, consumer prices and industrial production are on the minds and on the radar screens of all the Fed speakers. We're going to hear from Esther George today at 2:15. Right, she is what they call a hawk, which means she is somebody who does not believe, right, in using low interest rates. So it's going to be interesting to see what she says this afternoon at 2:15. We'll be listening in. Bottom line is today, though, 8:30 a.m. news kicks off the party. We got 9 o'clock, Treasury International Capital, another Red Star News, industrial production at 9:15, and we got that very important housing market index at 10 o'clock today. The housing market has begun to take center stage Now, if you looked at the retail sales report yesterday, what was the big what was the big red flag in yesterday's retail sales? It was building materials. So it's going to be interesting to see if that building materials. Remember, we've had a trending higher housing market over the past 3-4 sessions. So we're wondering if that retail sales report is going to be a sign of things to come for the housing market. There may be a bottom that falls out of it here pretty soon. We'll see. What you got to be aware of is we've got 2 Red Star news events this morning, and 2 Red Star news events means I'm always going to leave a runner. Got to leave a runner on the market today. 2 big Red Star news events, that means we've got major participation in the markets, and we will expect to leave a runner, and we will expect to see a relatively large range throughout the day today. All right, 8:30 a.m., be ready for that first news of the morning. Now back over to the crude oil squawk prep, and you'll see the rest of these charts are posted there for you already this morning. Check them out. Moving forward here, take a look quickly here at a daily chart of the crude oil futures, good old black gold. We can see we're still on our way up to that 108.90 symmetry. Now this is a great example here. We talked about this week already. We talked about this last week. We've got the bull channel. The bull channel continues to remind us that buying pullbacks is the higher percentage trade. As we go even faster time frames, we see a short-term bull channel. And again, we know what to do. We know to buy pullbacks with new higher highs. Members, we have a specific set of rules for buying pullbacks, don't we? Not every pullback is equal to the others. So we'll be waiting for that this morning. Buying pullbacks on crude for the high percentage trades in the long run. Where are we headed? 108.90. 108.90, that's my level. That's my level to keep an eye on today for our final target. Probably going to be towards the end of the week. We'll get up there to 108.90, but who knows? It's only Tuesday, and this is crude oil futures we're talking about. This may get up there this afternoon. We'll wait and see. Either way you slice it, though, we're looking to get long here on crude based on the daily chart. Let's keep looking, though. Over here on the 4-hour chart, open the 4-hour, and you can see right away here, the 4-hour chart illustrates a couple different things. In my opinion, there are three major clues here on the 4-hour chart. And those 3 clues are, the first clue, sideways, right? There's a sideways range we're seeing right now. Where is it? Sideways range. If I can write today, look, I'm not teaching English to you guys. Sideways range, as you can see it here, from 107.45 down to, we'll call it 104.31. Okay, so sideways range is the first thing I see. The next clue that I see is the support levels below us. Now, the support levels below us, what do we see in the support levels below us? I see a trend line. I see a trigger zone. In fact, I see multiple trigger zones, right? 104.79 and 103.99. What about the next thing? What's the third thing I'm seeing? Symmetry, absolutely. Members, you guys know me. I love symmetry patterns. Symmetry patterns, the markets love to move in symmetry. What's happened in the past is likely to happen again. It's a psychological thing. It's a technical thing. And it makes a lot of sense to me personally. So we've got 3 big clues here. Sideways range. Where's the sideways range at? Sideways range. You can see it trading right on the chart right now. You can see it. Sideways range. It was a little bit easier to see yesterday, right? Because it wasn't moving higher as it is this morning. We can see support. We've got that trend line support. We've got that trigger zone support, right? We can see major support levels below us. Again, all of this is really continuing to throw fuel on that bullish fire, right? No pun intended, of course. And then last but not least is the symmetry, right? Symmetry, again, is relatively easy. I've marked up an A, a B, and of course a C, and then of course that will project up to a D. So we have 109.50 for our symmetry projection. What was that level in the daily chart again? It was 108, right? 108 something. So we know that we've got a little bit of resistance before we get to that 109.50. But this again, this confirms we've got everything lining up here. Sideways range with a slight tone to the bull side this morning because, of course, we do have that bullish channel to use. So how do you play this then, Joe? Well, as you can see, we've run right into this 107.45 at this time, which means that what we're going to look to do is I'm going to look to buy here, but I don't want to buy into the 107.45. So if you're long right now, I'm taking some profit here, 107.11 through 107.45. Once I break above that 107.45, then I'm back to the races here buying pullbacks. Now, word of caution, we are probably going to see a fake out breakout here at the 107.45. So members, don't forget the difference. Excuse me if I can talk this morning. Don't forget the difference. Trying to do too much. Don't forget the difference between a good pullback and a bad pullback, right? A good pullback and a bad pullback. So as you get up at the highs here, we know we don't want to fall victim to that deep pullback that puts us below that 107.45. Okay, so just a word of caution. We do want to get that perfect pullback above it. Heck, I'd love to be buying right at that 107.45, that 107.50 as we go higher. But I don't want to get involved with this if it ends up collapsing back in and then I'm trying to buy into that 107.45. So keep an eye on it. We're buying pullbacks through this morning as we go higher, but I don't want to buy directly into that 107.45 area. Okay, moving forward. Take a look here now on a 60-minute chart. Let's now move over here. I'll move over to an hourly anchor. And this hourly chart here on Crude, real quick here, this hourly chart shows a lot of the same stuff that we saw on the 4-hour chart. The 60-minute chart, you can see there's that sideways range again. We can see the sideways range. The sideways range, of course, very easy to spot there. But now on the 60-minute chart, we've defined a little bit more information. We can see we have a last call fib. If you draw your fibs here from B to the C, you've got your last call fib at 107.09, 106.78. You can also see here that by connecting the dots, we were able to find some trigger zones below. That can be removed now, though, now that we've made new higher highs. So those are all gone now. I'll make sure to update on the blog this morning. So we find ourselves, again, in a very similar scenario that we saw in the 4-hour. We can see we have resistance levels overhead. Probably don't want to be buying at this point in the game. If we see that we've got some strong buy pressure, then that's another thing. We can always buy pullbacks. If we know that we've got some serious strength to the upside, we could be buying pullbacks right now. But for the most part, though, the path of least resistance here today will be I'm going to look for a fake out breakout for a short-term sell. But again, I'm not going to expect it to go very far here. I will expect it to keep pushing higher here this morning as we keep cranking higher. Again, don't forget about that symmetry, right? That symmetry resistance overhead, 108 and 109 that we found. The 60-minute chart tells me very similar to what the 4-hour chart told me. I know that as price falls, I'm buying at support. I know that as price moves to new higher highs, I'm buying pullbacks. All righty? Now, let's go forward here to a 5-minute chart because the 5-minute chart, it really is going to put a lot more, it's going to give me a lot more information here. Now, the first thing we see right away is we've already broken above the PRZ. Now, you can see the PRZ trade actually gave you, and we of course call many of our trades ahead of time. As you can see here, if you're looking closely at this, the PRZ trade at 106.85 actually gave you a 10-tick profit and then took your head off on that. So the PRZ trade fails at the highs, and now you can see that's going to give us a very bullish clue here going forward. We've broken through the trend line going higher, so that's gone now. Now we have a trend line at the lows here. And as you zoom out, you'll see here we're above the previous high of day. That's a very big clue. We've already broken and closed. That's the key. We've closed above that price reversal zone. So the PRZ trade failed. That's all right. We used very tight stops in the PRZ trade, only a 15-tick stop in the PRZ trade. So we get stopped out of the PRZ trade. Now here we are going higher. We are clearly bullish here to the upside. We haven't seen 8:30 news yet, so we'll have to wait for that. Prior week's high, 107.45. Look in the levels above me here. Assuming this price continues to rise higher, I've already tested the 107.06. That's one of our London fib levels. We've also got 107.29. These would be great profit targets for you today. And I've got the previous week's high. I've got last Friday's high of day at 107.45. I am buying pullbacks as we go higher. The previous week's high of day at 107.45 will be an easy target for us today, and 107.67 if we do feel some big, strong buyers in control today. All right, looking good here, guys, looking good. Bullish price action, buy at support. Do not buy at resistance, right? We don't buy at resistance. We buy at support. Keep in touch throughout the day today. Don't forget the news. We got 8:30 news this morning, 9:15 news this morning. If price does happen to tumble here, again, we're going to be looking for support levels to be getting long at. I will continue to adjust trend lines. That way we can continue to know where to be looking for those best buying opportunities. Now, I'm going to let you guys listen into Marty here because you can see here, I got to get into this. I got to get started buying some of these pullbacks with you guys. That's all I got here for you today. As you can see, very bullish in the market this morning. We're buying pullbacks, but you know what? I'm always interested to see what Marty Yerrico's talking about. I wonder what he's doing over there this morning. Marty, how you doing over there, buddy? Are you seeing the same bullish sentiment that I'm seeing right now?
Oh yeah, for sure, 100% here. So good morning, ladies and gentlemen. So what I'm looking at here is really opening above the pit session, above yesterday's settlement number, above that previous high day that we've been kind of sitting tight on, and that was that 106.33 level. And finally, we end up having a closing settlement number near that level, and we end up obviously opening up now. We're above that level right now. If we open up that pit session above the level, we can continue to watch that bullish factor and that sentiment come into play. So real quickly here, you can just obviously see, as JJ was talking about, that bullish channel, of course, as you can see, pretty much in the middle of it. So we're going to be waiting to get up to those 104.74s, right? I mean, 107.47, 107.45. I'm calling it 47 to 45. It's just a couple ticks off, and we're going to be looking to buy pullbacks above there, or even buy pullbacks to that level. Other levels of resistance above, I'll show you on the shorter time frame chart. I got that 108.01, right? 108.01. I also have a few other levels above, like, see, 108.01. I got 109.94. I got that 110 and the 112. Those are the two popular strike levels that the locals in the large paper buys in the pit, but we'll go over activity in the pit. So again, overall, still looking at that bullish trend to the upside, still looking at that bullish channel that we have been and continue to be in. And now let's look at our usual suspects to try to get an idea to see if we can get that push to the upside. So far this morning here, we look at our usual suspects, and you can see we have the RBOB, we have the heating oil, we have our Brent and our crude all trading higher, took slightly sideways, still in the sideways range. Again, that 107.45 is the high end of that sideways range. To me, I was personally saying the high was the 106.33, and since we're now above that, I'm feeling comfortable here that we can trade a little bit higher again, but still sideways to higher, so expect a nice grind, slow grind to the upside. Again, a nice sideways grind to the upside, which I'll demonstrate on the chart in just a minute. Overall, looking across the board here, we had those US ISCS Goldman change store sales come in. The week over week comes in negative 1.1%, by the way. They came in at 745, and of course that news, remember yesterday we were trying to look at those retail sales, and they did have a big reaction. Again, that was the number I was the most focused on yesterday. Ended up having a nice reaction on the market, as you can see, in the morning around 8:30 to 9 o'clock off the pit session opening bell price. Now, the most important data that I'm going to be looking at here today is going to be industrial production and housing market data. I feel those are going to be the most important. Again, we do have consumer price index at 8:30, Red Book at 8:55, Treasury International Capital at 9 o'clock, and as JJ was mentioning, I'm watching those two last economic pieces of data scheduled for release at 9:15 and 10 o'clock. That's industrial production and housing market index. Keep in mind later on today we also have API, that's the American Petroleum Institution, crude oil numbers. And again, those are our leading indications on the DOE numbers. Again, they gave us those two huge draws in advance before we got the DOEs. So tonight, watch that number. It's going to be our leading indication. You're going to get a very good idea of whether we're going to see another huge draw or we fall short. Again, the expectations for tomorrow's numbers are really huge. We're looking for a 9 million barrel draw on tomorrow's numbers. So, you know, this last 2 weeks of seeing those draws and that very bullish activity can quickly come to an end very shortly if we don't live up to that 9 million barrel draw in the number tomorrow. So we'll get to that later. All right, guys. So again, as we look at our usual suspects, we see the RBOB, the heating oil, the crude, and the Brent all trading higher this morning. Quite significantly as well. Again, breaching some major levels above that 107 on the crude, the 312 on the Brent, the 312 on the RBOB, and the heating oil, the 306. Brent trading around 109. Brent WTI spread in contango, very bullish this morning, as well as our calendar spreads here. We are kind of finishing up the roll in the pit, and we're going to start it on the screen very shortly. Again, I'm figuring we'll be fully rolled probably by the end of this week in the crude. You can see the RBOB and the heating oil already are going to be trading SEP most likely today. I'm going to be quoting SEP in the pit. All right, so again, those Augie SEP spreads, Augie October, Augie Novi, and DEES are all giving us a little bit of a bullish sentiment all to the upside. Dollar, ladies and gentlemen, this morning traded a little bit lower as we have our other commodity currencies trading higher. Again, dollar's lower and our rest of our commodity currencies are higher. Again, last print on that dollar is going to be around the 82, 89.5. Again, we just fell about close to about 60 ticks, 30 points here in the dollar index this morning. Now I'm back into the 82 handle. We're talking 82, 88 half now trades. So as that dollar falls, we do have a risk-on sentiment, and as the dollar falls, crude will be trading higher, simply put it here. So that's really it here, guys, in terms of our usual suspects. Again, we spoke about that crude trading within the range and looking to buy pullbacks again once we got above that 106.33. So again, that's going to be our golden number here, getting above that 106.33, opening above that. Then we're going to be watching that, of course, 107.45, right? And then I got that 108.01 here above. And then, as I mentioned in the pit, large locals in paper, they buy the 110, 112 strikes to the upside over 5,000 times yesterday. Again, I spoke to one of the brokers in the pit, SES Commodities, the guy Tom Riley. He's a big trader down there, and he was speaking about how a lot of his London clients, majority of his book is some guys are in London there, and then they have not been putting any orders into the pit the last couple of days. So again, we're seeing some lack of some major market participants. So that causes higher volatility, right? And these nice moves again. So overall, it's not a terrible thing that our big participants aren't in the market, but overall, I just want to keep that in the back of our minds that all of our participants aren't there. Guys, volatility holds steady and firm. We've seen vol holding levels around that 24 to 25%. Yesterday was a very choppy day in volatility. Most of the day it was about 22% in volatility, but then all of a sudden we've seen, boom, just a big uptick in vol, and then we started watching crude make new higher highs into the close. So again, watch that volatility. We'll get to that on the sheet in just a minute. I just want to point out here that the crude volatility was trading higher. Right now it's higher about 25% in the morning hours, so that's very bullish as well. And our natural gas volatility is about 30%. Natty gas, what a day yesterday, natural gas. You can see we're still trading in our sideways range, right? We bought those 355s and those 357s. That was the low of the range. In the pit, we saw over 15,000 355 calls trade in the pit, so that's huge here in terms of just upside here. Again, they buy 355 calls. They push this market higher. Over 1,500 of those, 15,000, sorry, of those trade, and you can see the reaction that the market has. Okay, so now we're up towards the higher end of our channel and our wedge. Again, we're talking, we have a few variables here, right? We have the high of our channel, right? We have the high of our wedge, and then we have that resistance and the high end of this sideways range. So again, we're going to be watching to sell those 370s, right? If we get above 370, then we can see the 370, 320, but likely I believe we trade sideways, right? And maybe just trade a little bit lower into this wedge. That's what I'm predicting here, and that's what I'm looking at. So again, very simply put it, we trade sideways to slightly, possibly lower as we're up at the higher end of our channel and our wedge, and also our sideways range on the natural gas. And again, you see this very similar thing on the larger time frame, the 240-minute chart. We're pretty much sitting right there at the high end of our wedge. So again, watch a little bit of selling here. If we could possibly test 370, and then that 370 is a nice little sale there. Again, we're going to have to wait until we get some numbers to move the market, obviously, for natural gas. All right, guys, let's take a look at those levels now. Let's write levels. Talk about our pit session levels from yesterday. So, all righty, guys, what I got for you here is pit session high from yesterday. I have 106.40. Again, that's the high that we made in the pit traded contract. Again, I got 106.40. Your low, 105.08. Close and settlement number, ladies and gentlemen, I got 106.30. Again, the pit session closes and settles 106.30. Today, your daily pivot's going to be just below that 106 at 105.93, which we are trading above at the moment. I got resistance above at 106.77. I got 107.24, right? That's going to be a nice little piece of level of resistance that we're going to be running into very shortly. Again, that's 107.24. I got 107.45, of course, right? And then also we have 108.57 overall. Could be a nice little profit target. Looking down below, I got support down at 105.45. I got 104.61 and 103.29. Ladies and gentlemen, here in the open interest here this morning, we have about 203 contracts, 203,037 in the Augie. The SEP shows us 323,170 in the SEP, and that's huge, guys, in terms of open interest here. So again, we decrease open interest in the Augie, we increase in the SEP. Of course, as always the case, implied volatility holds around 24 to 25%. Again, that's 24 to 25% there in the implied vol. OVX ends up today 2373 to 2412 on the OVX. Again, upside calls, we see that 108 and 110 call trade in the pit. Also 112s do trade in the pit as well to the upside. Downside, they just do it about 2,000 times each. These were 5,000 each. These were 2,000 each. We got just some support down at 105, 103, 100, and 102. And natural gas, real quickly here, we have your pit session high from yesterday over at 367.80. Once again, that's 367.80 on your natural gas. Once again, that's your pit session high. Right now, we trade in the Augie contract 366.70, 366, yeah, 30 right now trade. So again, we're just close to that high, just starting to sell the highs of this channel here. So again, your pit session high 367.80, low 354.60, closing settlement number 367.10, 367.10. Daily pivot today 363.10. Once again, 363.10. Guys, I got resistance up above at 371.60, 376.30, and 389.50. Support down below 358.40, 349.90, and 336.70. Again, so far we've been watching implied volatility trade about that 30%. Vol index 30.80, and we've been watching open interest here just decreasing in the Augie, increasing in the SEP. We're talking 124,166 in open interest here for your Augie SEP. 258,635 where open interest currently stands. Again, wide range of natural gas yesterday. Expect to sell the highs here this range now, and we can continue to watch just a little bit of a downtick. Again, huge activity in those 355 calls in the short-term daily and weekly options. That's what made us rose yesterday, obviously, and you can see the resistance up above. They sell, they buy the 370 and 375 put acting as resistance above. All right, so one note that I was telling you guys, one of the brokers that I spoke to once again in the pit, they were telling me that they have a trend, right? So the downtrend would begin if we fall, right? And we would trade below. We have 105, 102.57. I got 102.13 and 101.45. 44 actually. That will start the downtrend here, ladies and gentlemen. Again, if we do get below those levels, just to note, just so you guys know, so we're not really in the downtrend yet or even close to a downtrend. We're more uptrend, of course. So again, we're simply just waiting to buy pullbacks here. Again, we got 107.45 to the upside here that we want to keep an eye on. We have 108.01 as well. That's our level. So again, we're going to buy pullbacks and watch a little bit of a sideways to bullish tone here, ladies and gentlemen, this morning. And that is about it for me. Again, I'm going to get ready here, go talk to a couple more traders here in the pit, try to see if those London trades are coming in, hitting the pit at all today. And I will see you guys all in just about 50 minutes. Again, I'm going to throw it back over now to Joseph James here, guys, in Los Angeles. Again, I'm thanking you all for joining us today. Got to be here, guys. You got to be here for the good times. You got to be here all the time. Again, I'm going to throw it over now over to JJ. Alrighty.
Thanks, Marty. Appreciate it, my man. Another great broadcast today, guys. Thanks to Marty Yerrico from Traders Audio. Him and his partner, Jeffrey, have a great broadcast every morning at 8:50 a.m. Eastern Time. Check out tradersaudio.com for more information about their broadcast. And, of course, my name is Joseph James. I'm at jj@schooloftrade.com. Drop me an email, post a comment on our blog, give me some feedback. As always, I run a trade room each morning at 8 a.m. with our students over at School of Trade. I want to thank you so much for being here. Thank you to Marty. Thank you to partner Jeffrey. Thanks for doing a great job at Traders Audio. Thank you all for being here this morning. And we'll see you guys here tomorrow morning for a Wednesday edition, a hump day edition of our crude oil morning prep. Don't forget to learn it so you can earn it out there and be ready for that 8:30 a.m. news, guys. Hope you're enjoying the summertime. Don't forget to send me your feedback. And as always, we'll see you tomorrow. Adios, amigos. Bye-bye for now.